Welcome to a special edition of the Morning Market Briefing. It's an emergency edition because the emergency powers asserted by the IEEPA tariffs have been struck down by the Supreme Court in oral arguments heard in December. We more or less, beginning of November, we more or less thought it would be a 6-3 vote, and that's definitely what we saw this morning. So 6 of the Supreme Court justices opposed the tariffs, and then 3 dissented. The concurring opinion from Justice Neil Gorsuch was 45 pages long for a concurring opinion. There's 170 total pages of opinions rendered on this. We do not know anything about refunds. That's going to be a critical piece of this. This is about 70% of the Trump tariffs that have been imposed. This is not all of the Trump tariffs, but when you're talking about $30 billion in monthly tariff revenue, that's up from 8. You're talking about a delta of 22. So you're talking about $15 billion per month of additional tariff money under these tariffs. Not only that, but it's also been used as a threat against other countries in terms of negotiating trade deals. So you're essentially removing that tool from the administration. So there are some significant consequences to this. When tariffs were first imposed after Liberation Day under this authority, the market sold off significantly, bonds sold off significantly because of the threat of higher inflation. As time has progressed, and it seems fairly clear that the inflation that was feared at the time is not coming to fruition. Instead, bonds have come down because rates have come down as people have become less concerned about inflation and more positive on the state of the federal budget. And indeed, on a year-to-date basis, we're running a smaller deficit than we did last year and the year before that. So that's all good. That was all good stuff, and a reason that interest rates had fallen. But today, now that these tariffs have been struck down, again, because inflation is no longer the primal concern of the tariffs, it is more debt situation, and is the deficit out of control. So, Tom, I'm curious how, number one, you're thinking about this as an impact for the bond market and also the stock market. But I'll talk about that too in a minute. And then secondarily, the options for the administration now to continue to lean on tariffs as a source of negotiating power and also government revenue.
So the bond market is selling off. I wouldn't say that it's extreme, but my guess is that for as much, tears and gnashing of teeth that's come from the fears of inflation, we never saw that. And so in the flip side, I think the market is also not going to immediately think that inflation is going to drop on this news. Even though you could make an argument that while tariff inflation certainly was there, it was very small. You could say, hey, we're going to get an equal and opposite reaction, which is a very small drop in inflation, which would put us pretty close to 2%. There are basically 3 fallbacks that have been outlined that could be potentials for reinstating the tariffs, or at least getting some of them put back on the board. So the 3 major ones, there's Section 232. Well, let's back up. So John Roberts, in his opinion, basically said that the framers gave Congress alone the power to impose tariffs during peacetime. The president must point to clear congressional authorization to justify his extraordinary exertion of that power. He cannot. And what's missing in IEEPA is it doesn't use the word tariffs. And that's been a sticking point the whole time, is that they can't say that necessarily that that's there or not there, because it's not under the law that they use to facilitate the tariffs. So the fallback plan is 3 parts. There's Section 232 of the Trade Expansion Act of 1962. And the legal basis would be that for national security, you're allowed tariffs if, quote, imports threaten to impair national security, which you could make an argument for. But the guardrail on Section 232 is that it requires a formal investigation by the Department of Commerce that can take no more than 270 days. So we're looking, into the middle of next year, or I guess early next year. How far are we in? 51 days into the year. So call it December. And once that report is issued, then the president can enact the tariffs he'd like to do. The second fallback would be Section 301 of the Trade Act of 1974, which is to alleviate unfair trade. So it's used as a retaliation measure against countries that are, quote, unreasonable or discriminatory in their trade practices, which I think is probably, you could argue that was the initial piece that Trump was going after, is that we've been put in a, we were fighting uphill against almost every country in the world that was imposing tariffs on us. Now, the guardrails on this one is it requires the U.S. Trade Representation Representative, USTR, to hold public hearings and issue factual findings, and cannot be used just to raise revenue. And so then you kind of get into the, should Kevin Hassett discipline the New York Fed? Because the New York Fed put out a study on tariffs that said that we were going to have, out of control inflation, and that shelves were going to be empty for Christmas, which a lot of people are saying was 3 months ago now. And then the last fallback piece would be Section 122 of the Trade Act of 1974. So same law, different section, which was the balance of payments, which allows up to 15% temporary tariffs if the U.S. has a, quote, serious balance of payments deficit. Now, this one I think also has a lot of runway because, and we got trade data yesterday, we almost always run in a permanent trade deficit, and that's something that Trump has tried to reduce significantly. We've seen periods of time over the last year where we've seen the trade deficit hit lows for multi-decade lows. I mean, we've seen a big shift in the trade deficit. But unfortunately, those are limited to 150 days unless they're extended by Congress, and it's designed for currency crisis and not a long-term policy. And then, of course, the fourth is to codify the loans, have a congressional vote to say these tariffs are illegal and they are law, which is, basically what Judge Roberts is saying needs to be done, at least under the auspices of using the IEEPA as the basis for these tariffs. So there are fallbacks. It's certainly possible that Trump immediately shifts to one or more of these, depending on the country, keeps the tariffs alive in the short term, and then we go back to the Supreme Court to see if those laws will allow or disallow Trump to use tariffs. But the advantage of these versus the IEEPA is that the word tariff is specifically used in each, and therefore you could argue that the law is more applicable to tariffs specifically.
Yeah, it becomes a lot more cumbersome. A lot of those other laws have time limits on them in terms of how long the tariffs can be imposed. Justice Kavanaugh's dissent, so Kavanaugh, Alito, and Thomas dissented. Chief Justice Roberts wrote the majority opinion. In the majority opinion, like I said, Roberts says that this is bad radio, but they're not making an opinion on, they're not rendering an opinion on the refunds at this point in time. But Kavanaugh does talk a lot about this, and a primary reason for the dissent is because it would be such a mess to unwind. He says, the tariffs at issue here may or may not be wise policy, but as a matter of text, history, and precedent, they're clearly lawful. I respectfully dissent. He says the process on refunds is likely to be a, quote, mess, as presented in the oral arguments. The Roberts, on the other hand, says the court says nothing today about whether, and if so, how the government should go about returning the billions of dollars that it has collected from importers. So it is going to be a mess, and the Supreme Court's basically saying we're just not going to opine on this at the present time. There are hundreds of lawsuits in front of the courts right now for refunds related to these tariffs, because if you are a big retailer and you've spent a lot of money on these tariffs, you want your money back. And so Costco is a big one that joined this lawsuit a number of months ago, I think back in September or October. So this is all kind of happening in the background. So what does it mean for stocks? And I think it's a little bit difficult to tell because, one, you can look at the direct impact, which is it should be really good for a lot of the companies that were hit. I mean, Garmin, 2 days ago was talking about 15% cost increases by absorbing the tariffs. So you'd think that Garmin should, move significantly higher as a result of that.
Or they do it and they just keep the money.
Yeah.
Apple,
same thing. And then, of course, a lot of the textile companies or the furniture companies, a lot of places that were really significantly hit by the tariffs, they should be performing exceptionally well today, and they're not. And part of that is a lot of this was already priced in. I think that's one of the reasons we're not seeing the market reaction be as large as what we would have thought. The other option, too, to Tom's point, is there are other ways to get tariffs, and frankly, it'll probably be messier. At the end of the day, the market does not like uncertainty. And right now, this kind of puts us back to where we were before Liberation Day, where there are essentially much lower tariffs, and we don't know what's going to happen with refunds, and we don't know what the exact response from the administration is going to be. So I think there remains a lot of uncertainty, and that's offsetting any benefit that we had from this ruling today. So because it's interesting, because I think if Liberation Day, was on April 2nd, if on April 4th, the Supreme Court came out and struck down these tariffs, I think the market would have absolutely ripped. And we're not seeing that today because of the uncertainties involved.
So I'm trying to do a little bit of research. I'm looking around on Twitter, trying to figure out what the situation is for the refunds. So there's some stuff coming out that there is I guess according to this, there's a new federal rule that took place on February 6, 2026, that if you are owed a refund on a tariff, you basically have to be subscribed to the Automated Commercial Environment Portal. So that's the ACH back office for the government. And you have to be linked to a specific bank account. So they're not going to mail out paper checks. So it seems to be that if you are harmed in this, since these were illegal measures, you're going to have to, one, get attached to that, two, file a ton of paperwork to prove that you were harmed by the tariffs and what that amount was. And that also that the government, when they owe you money, does owe you interest. So the question is how much interest, or so, what's the net effect of this going to be? It's going to actually be larger than the tariffs take it in, because, we're coming up on almost a full year. You're going to have a full year of interest on top of that. What that number is, I'm not entirely sure at this moment, but suffice it to say the government's going to have to pay you a little bit extra on top. There is some chatter that there would be under the fallbacks, the different articles that they could potentially use to keep the tariffs or reinstitute them immediately, that you could say that it was preemptive payments for retroactive. We're going to go back and say, actually, we're using this law to do it, and we're going to keep that money and slow the pace at which they have to pay it out, which ultimately, if it goes back to the Supreme Court, then the number is going to grow larger and the amount of interest will be over a longer period of time. And so there's a number of hurdles on both sides. One, can they keep the money? Two, if you want your money, you're going to have to file paperwork with the government, which we all know is easy to do. So, I mean, this is just a mess. I'm not sure what the net effect is. I mean, the market is up a little bit. The bond market is down a little bit. I mean, it's not major. This is not on the scale of Liberation Day, but this is a major change in the tide for the remainder of 2026 until some decision is made on whether or not they're going to try and enact one of these fallback rules, or, I mean, it's interesting. Government spending goes up technically, right? Because suddenly you're going to get, they're not checks stimulus in the mail. Yeah. It's what it is increased government spending, which is something that has been a drag on GDP, because the whole point of DOGE and of the Trump administration is to try and reduce that deficit. And part of my argument that rates are going to come down is that deficit spending is being reduced, but now it's actually being increased naturally by this. To what degree, I don't know, but I think the bond market is reading that correctly, at least for the short term.
Yeah, and I agree, and I think that makes prospective deals like the one that we saw with Indonesia last night. it makes additional deals like that less palatable. I mean, if you're Indonesia right now and you just negotiated a change in your deal from a 32% tariff to a 19% tariff, and like now that's inked, you got to be feeling pretty stupid.
Yeah. Yeah, you spent a lot. You did a lot of work.
And now you're signed up for a 90% tariff when all the tariffs just went away.
Man.
So I don't know if there's
big day.
Get out of jail for them.
They lulled us to sleep because the last few Fridays we'd be like, we might get a decision today, and then today we didn't think about it at all.
It's interesting how this is going to work politically too, because and I have the Democrats, Elizabeth Warren, coming out urging refunds for Americans after the Supreme Court ruling. These are the same people who have been very against the Trump administration because of concerns about the deficit. And now you're having the Democrats argue for refunds for those companies. And meanwhile, then you have President Trump, according to headlines from CNN, saying he has a backup plan for tariffs after the ruling. He calls the ruling a disgrace. For his part, Atlanta's own former Fed member, Raphael Bostic, said, it's hard to know fallout from the Supreme Court ruling on tariffs. It hinges on issues like need for rebates and how firms react. Frankly, I'm kind of with him on this one. And again, this just speaks to the uncertainty that's involved. And it makes it really difficult to make policy. And if you're a company now, it makes it really difficult to do business. I would say that I would anticipate the trade deficit being massive in the month of March. Because if I'm a company, I'm going to stockpile as much stuff as I can in March because something's going to happen.
It's going to look a lot like, was it Q2 of last year where we had a negative GDP number because of the trade imbalance?
Yep. So I think that's exactly what's going to happen. So we'll have to see what happens with that. But I guess we move on.
Time to go make some trades.
Yeah.
So everybody have a great weekend. We may have some extra content coming out today. It may come out on Monday, but stay tuned. We've got some big developments at the podcast for the next few weeks, and we will see you on Monday.